Good morning, it's Harvey Jackson. Just going to go through some of the top news items. Yesterday I had a nasty cold, still got a little bit of a cold, but it, we'll get out and tough through it here. We'll be visiting a few of you guys this week for sure. So Trudeau should resign, and that kind of comes here. The smug bastard here smiling as if there's good things coming about it. Is the resignation of Christopher Freeland, and the best thing for his party. Not that I really care, but his party and even the Canadian government as a whole, Canada as a whole, would need him to maybe step aside. Uh, One of the major features that was talked about before the resignation, or just after the resignation, was the deficit that got announced. Rather than a $40 billion guardrail, it went down to $68 billion deficit in Canada, and Australia's got some of their same problems. They are pushing some or higher deficits than expected as well, but they're not anywhere close to the jackass move that our Canadian politicians have went through. But anyway, so let's just cover this here as well. There's Fed announcement today, and it's making some Wall Street a little bit edgy. Um, this is one of the major featured articles that I'm going to talk about here this morning, and it's about the U.S. E15 year round. It got announced yesterday, and it's actually putting some pressure on the soybean market. It's thought that it will actually uh, take away some of the veg oil uh, um, requirements, but I don't see how that actually comes into play. So uh, you know, we'll, maybe I don't have this whole thing figured out, but Indonesia is lifting has put in a 40% um, palm oil restriction. But the problem with it is, and it says here that they have yet to set aside supplies for that additional blending requirement. So that uncertainty is not helping the market either. So we're probably going to see Indonesia probably come up with something soon. But at the same time, when I look at the curve on palm oil, and I'll talk about when I get there, when you have the market going up and down, it is actually overpriced palm oil above the 5,000 ringgit, and then you find some buyers below the 5,000 ringgit. So looking to catch some support there. Grain stops auction of imported corn from stockpiles, and some of this is just kind of um, and we've been talking about this in the most recent articles on Chinese or U.S. shipping of corn, and China is not at the same kind of pace that they were in previous years because they have these stockpiles. Uh, Karen Brown put this together, and I thought it was a pretty good indication of where the market's gone in the year. So you can see corn is at 95. We're close to 95% of where it was, and you can see some of these things actually went higher, some went lower. Wheat was higher, now at 87. Soybean oil is 86, probably a little bit lower today. Soybean meal is down by 75%, and soybeans down by 76%. And what is she just taking a snapshot of the year? So here you got a year in review of managed money of corn futures, and you can see how that's changed. It's we're back into a long position with managed money. Another snapshot that I've been paying attention to, and just understanding what she's getting at here as well, is just the palm oil spread of soybean, and it's a negative 148 points of per U.S. dollar. So it's really uh, cheap down here. You can say that it's uh, the palm oil is more expensive than the soybean oil, which doesn't happen very often. And in this one here, you're just seeing where the trend is of the soybean exports, and we're on pace for kind of the middle of the range, right? So you're kind of in the middle of the range. So we'll see if the election or tariffs actually come on. That could change everything. So we're just looking at the markets real quick. Canola's down uh, $9 to $8, depending on which month you're looking at, and rapeseed is down similar dollars. Soybean oil is down below 40 cents, and your palm oil is down 182 ringgits, down to 4,619, and your wheats are just slightly up. The Canadian dollar is down again as well. So just looking at the forward curve here on canola, and again, just paying attention to what volume and what's in open interest. So you're basically saying March is now the front month. It's got the most open interest now. So I will not be paying attention to January, but some of this uh, uh, rapid moves in these markets is because of the thin volume trade around Christmas here and the March contract taking ownership, or they taking the front. And that tends to happen quite often on some of these markets as well. So here's your leg of the canola going down. We've got 4 legs, 4 red candles, and looks like we're going to get down to this retracement way down here. Here's next year's kind of a look to see where we would be pricing. I like it up in that area, so we have to be patient for to capture some more sales up there. Rapeseed does not have that downside that we've seen on the canola, but it has some red candles here as well, but still holding up better than the canola for sure. Here's your price differential. It's $207, so that's huge. Now, I do not want both of them go down at the same pace. But if we do, we still would be expecting to see more exports of the Canadian canola because we're too cheap. Soybean oil broke through the 23.6 retracement value, and you can see where that does that put you. You still have to get to 38 cents, and it's currently trading at the 39. Palm oil, see the waves here. It's too expensive up here. No buyers. All buyers back away. Buyers start to come back into the market. So expectation is to find buyers start to come back in the market, and maybe an announcement by Indonesia set aside palm oil for their B35 going to B40, with the expectation probably to move to B50. Chinese rapeseed oil, it was a little bit green. West Texas is up a little wee bit. And then here's your March soybeans. It's just falling apart these last few days. You can see that the 955 is kind of the support area. And this is the Trump tariffs that we had in the past. So that's the area that where soybeans could possibly fall to. I don't think that's going to happen, but hey, I've been proven wrong many times, and it could be wrong again. Here's our result of the deficit right there in the announcement for Canada, and the Freeland kind of resigning, and some poor economic numbers in Canada. It's not helping our dollar. So we've had these issues before where we got down to 68. But here I just took a snapshot of the highs and lows. So you could say that we had good economic times up here, poor Canadian economic times, and we could be end up going into the crapper here with Trudeau. If he stays on, we could be back in those low levels if he remains trading and adding debt like we have. So let's get into the wheat. Wheat is still doing these waves here, a little bit green today on the spring wheat below the $6. And here we're looking at the December 25. It's a you got the carry, of course, but still looking for higher values in there as well. So Chicago wheat testing, it's trying to get to its lows that it's currently made. And here's your Kansas wheat, a little bit green on there. Looks like it's trying to get through that 23.6, but not managing to hold above that, or trying to trade above the 10-day moving average, even having difficulty. But when you look at the MATIF, it's actually got some good support, blew through the 61.8 retracement value, and above all some of the short-term moving averages as well. And if you look at that, it's got some strength. Oats knows nothing. Corn, you could say it's in an uptrend, but it still has to get above that 50% retracement and the long-term moving average before we can change our mind, and that's sitting around the 450. Live cattle just on fire. We've had some really good days and a couple red days here, but man, oh man, if you have cattle, you should be defending these prices with some sort of foot under the market for sure. That's all I have for you today, and look forward to seeing you.